Hey everyone, it's Julie here with TipRanks. Today we're taking a look at 3 strong buy utility stocks to help weather uncertain market conditions. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're diving into the world of utility stocks. This is a sector known to be defensive due to their ability to weather different economic conditions, and markets certainly have been volatile lately with ongoing trade wars and different tariffs every single week. Now, of course, this sector could see some spin-off effects from those different trade deals, but overall is considered to be more reliable and steady than others, and often these stocks come with an attractive dividend as well. So today we're going to take a look at these companies, what it is that they do, and of course what those Wall Street analysts are predicting for the stock's future. We found today's stock picks using the TipRanks stock screener. Found right at the top of the screener menu, we put in a few different filters today, including an outperform rating on the TipRanks Smart Score, a strong buy consensus from analysts, and of course narrowed it down to the utility sector to get our list of companies below. Check out the stock screener for yourself over on the TipRanks website or right on the TipRanks mobile app. You can download using links in the description down below or by scanning the QR code on your screen. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel. Now let's dive right into these 3 strong buy utility stocks. First up is a company called Evergy. They trade under the ticker EVRG, currently priced just above $65 per share. Overall in the past year, they have gained 33%, and in the last 3 months are up over 6%. They currently score a 10 out of 10 on the TipRanks Smart Score with increased hedge fund activity and positive technicals and fundamentals. Evergy is a leading utility company providing electricity to residential, commercial, and industrial customers across Kansas and Missouri. They operate an extensive network of power plants, transmission lines, and distribution systems, ensuring that their customers have access to consistent and affordable electricity. They focus on integrating renewable energy sources and modernizing their infrastructure to enhance efficiency and environmental sustainability. They were created by combining Great Plains Energy and Westar Energy back in 2018, and as a combined company, their mission is to empower a better future. Today, half of the power supplied by Evergy comes from clean sources. Taking a look at our TipRanks AI stock analysis, Evergy does come in with an outperform score. Evergy stock is well supported by strong financial performance and positive technical indicators. Their strategic focus on infrastructure modernization and growth provides a favorable outlook, although some high capital expenditures and the need for additional equity issuances could pose some near-term challenges. If we do jump down to the earnings call summary, the last one came out on February 26th. They did highlight strong earnings growth, successful regulatory incomes, and significant economic development wins, despite seeing some challenges from weather and increased operating expenses. And alongside that quarterly earnings report, Evergy also announced a 4% increase to their current quarterly dividend, which now sits at nearly 67 cents per share for a dividend yield of 3.94%. Now, the company has been paying out a dividend since 2018 when they merged, but their predecessing company has been paying out since the 1980s. At the end of January, we did have an analyst from Guggenheim upgrade their rating on the stock to a buy. And this was part of them shuffling their ratings on the overall utility sector, arguing that the group is oversold and undervalued and should outperform in 2025. And with 7 current analyst ratings, Evergy does come in as a strong buy, with 6 buys and 1 hold, with an average price target of $70.75, implying an upside potential of over 8%. When we look at those price targets down below, you can see quite a few of them have been bumping up those price targets recently. Our low end here is our hold, which would be a slight downside at 0.6%, while our high end comes in at $74. We have a couple of those for an upside of over 13%. For our second stock today, we're taking a look at Essential Utilities. They trade under the ticker WTRG, currently priced at $39.74. Overall in the past year, they are up about 14.5%, and in the last 3 months, up about 2.5%, currently scoring an 8 out of 10 on the TipRanks Smart Score. Essential Utilities provides water, wastewater, and natural gas services to communities across the United States. They operate primarily through their 2 main subsidiaries, Aqua, which handles the water and wastewater services, and Peoples, which manages the natural gas distribution. They're committed to delivering reliable, safe, and sustainable utility services, catering to both residential and commercial customers in various regions. They are one of the largest publicly traded water, wastewater, and natural gas providers in the U.S., serving approximately 5 million people across 9 states. And they also have an outperform score on our AI stock analysis. Essential Utilities demonstrates strong financial performance and positive market momentum, bolstered by strategic initiatives and successful regulatory outcomes. However, there are concerns about the balance sheet and negative free cash flow tempering the outlook. While valuation is fair, operational challenges could present some potential headwinds. But the company's strength in revenue growth and earnings guidance do position it favorably within the regulated utility sector. And when we jump down to their latest earnings call, which came out on February 25th, overall they did highlight strong financial performance and significant progress in strategic initiatives. They also announced a 6% increase to their quarterly dividend, continuing a 30-year track record of growing it. That quarterly dividend is now 32.5 cents per share for a dividend yield of 3.22%. At the end of January, an analyst from Jefferies upgraded their rating on the stock. They cited the expected return to Essential's water acquisitions in Pennsylvania and beyond, with key closures in Q1, significant capital expenditure upsides from ongoing compliance-related investments, and an enhanced earnings trajectory with greater visibility for the upgrade. And with 6 current analyst ratings, Essential Utilities does come in as a strong buy, with 5 buys and 1 hold, and an average price target of $43.20, implying an upside of 8.7%. Looking down below, on the low end is a hold rating at $41 for an upside of 3%. We have a couple of those, and a couple high-end price targets at $46 for an upside of nearly 16%. You guys know the deal. If you've made it all the way to our third stock today, then do me a favor and make sure you've hit that thumbs up button. Last but not least, we're taking a look at PPL. And their stock trades as just that, PPL. Currently priced above $34 per share, their stock has climbed over 30% in the past year and has gained 6.4 in the last 3 months. They score a 10 out of 10 on the TipRanks Smart Score. PPL Corporation is a major utility holding company headquartered out of Pennsylvania. Operating primarily in the energy sector, they focus on the generation, transmission, and distribution of electricity. They serve millions of customers across the United States and also the United Kingdom through their regulated utility subsidiaries, including PPL Electric Utilities, Louisville Gas and Electric, and Western Power Distribution in the UK. PPL does currently have a neutral score on our AI stock analysis, saying that the overall score reflects stable financial performance and strong technical momentum. The company's focus on infrastructure investments and operational efficiencies position it well for future growth. However, some high valuation and significant financing need does pose some risks. Jumping down to that latest earnings call, which came out on February 12th, the overall sentiment was neutral. They did have successful infrastructure investments, achieved O&M savings, and an updated growth forecast, but they also did miss some earnings targets and saw some higher operating costs. That quarter did also include a 6% increase to their quarterly dividend, which currently sits just above 27 cents per share for a dividend yield of 3.02%. Over the past few weeks, following that quarterly report, we have seen a handful of Wall Street analysts increase their price target on the stock. And with 11 current analyst ratings, PPL does come in as a strong buy with 9 buys and 2 holds. The average price target comes in at $36.73, implying an upside potential of nearly 7%. And looking down below, we can see a bunch of those analysts that were bumping up those price targets. On the low end, we have several at $36 for an upside of nearly 5%, while our high-end price target is $39 for an upside of 13.5%. So that is a quick look at 3 strong buy stocks in the utilities sector. Let me know your thoughts on these companies in the comments down below. I always appreciate hearing from you guys. And of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock. So please make sure you stick to your own investment plan. Thank you guys so much for watching. Have a great day. I'll see you back here next time.